We're joined by the country's finance minister, Şimşek. Sir, thank you very much indeed for joining us. Look, Prime Minister Erdogan described earlier the Turkish economy as an island of calm in what is a very difficult story for Europe. Is that true? You have a current account deficit and you could be heavily exposed to a significant disruption from Europe.
Well, we have strong fundamentals, but we're not an island. We are integrated to global economy, so what's happening in Europe is certainly worrisome. We are worried because it does affect us. But we've got a very healthy banking sector. We've got strong fiscal position and also strong household balance sheet. Our problem has been last year and the previous year has been to slow down the economy. Yes, we do have a rough spot, and that's current account deficit. But now that domestic demand is moderating, it's certainly coming down and is well under control. It's easily financed. But it is a source of vulnerability, and we are obviously watching very closely.
Have you prepared contingency plans for, say, a Greek exit? Are you concerned about the implications on credit that it could have for your own economy?
Well, I mean, you can never be prepared for a major external shock. You only can have strong fundamentals and therefore be resilient. Our exports to European Union are down in April, for example, year-on-year by 18%. But our exports to the rest of the world are up 30% year-on-year. So clearly, even that single number tells you how weak European domestic demand is, how troubled local banks are. I mean, I'm talking about European banks, and how difficult, painful austerity is in Europe. So quite clearly, yes, we are in a strong position. We are in good shape. But as I said, we're looking forward to some sort of resolution, a fundamental resolution of the European problem.
What would your view be of a bailout for the Cypriot economy? Would the Turkish side be prepared to add some sort of stimulus? Are you looking at the situation in Cyprus? And what is your policy towards it?
Well, we would welcome any helping hand, both for Greece as well as for Greek Cypriots. They're our neighbors. We care about their stability. We care about their prosperity. If our neighbors are doing well, we will do well. So clearly, from our perspective, we would like European leaders to take strong action and help, fix this Eurozone debt crisis. And I think, whether that's Greek Cypriots, whether it's Greece or Spain, it doesn't really make a difference. But our neighborhood is important to us.
You bring up the policy response. What would your response to this crisis be? What do you think needs to happen in the Eurozone?
Well, Eurozone has obviously a monetary union, and unfortunately, that on its own is not functioning well. Austerity is not very effective. It's painful. It's destroying jobs. I think it's time for European leaders to get together, to have a collective fund for bank bailouts, to have a fund for also growth. I mean, you cannot have, fiscal adjustment, and through that adjustment, because external demand is weak, domestic demand is weak, banks are weak, and that is creating a backdrop that is, destroying growth and destroying jobs. I think it's like a trap. And so clearly our view is that yes, long-term structural adjustment is needed, but that takes time. Transformation takes time. In the meantime, you need significant bank fund, some sort of fund to help banks recapitalize them, rehabilitate them. But also, the focus has to also shift to some extent on growth. And I'm not saying that moral hazards should be ignored. I'm not saying that, there are no structural issues. I think structural reforms are essential, but Germany has to agree, and the rest of Europe has to come together to do something about it. Otherwise, you know, it's spreading and the fire is getting bigger.
Is your sense that we need a sort of Keynesian response here?
Well, a mix of that and, you know, monetary policy could be loser, no question about it. I think there could be a pool of funds that should be used for bank recapitalization. I mean, otherwise, think about it. You've got a government that is pushing for austerity because it is faced with an unsustainable debt dynamics. But then you've got the banking sector that is weak, and the bank failures means that those who hold government debt, you know, there's so much linkages. We have to break this vicious circle. And it's not just about Keynesian, you know, economics. It's really a combination of many bold actions. At the end of the day, you need political will, you need political leadership, and that is the question mark right now.
Can I just ask you one final question and bring it back to Turkey? I know finance ministers aren't meant to talk about what central bankers do, but we saw a sharp decline in Turkish inflation last month. The central bank is bringing inflation down very rapidly, but globally the oil price is coming down quite quickly. Is there a danger that we sort of slightly overdo it on the downside?
Well, last year we had an overheated economy, so we took measures to rebalance the economy. But unfortunately, global backdrop has become a lot less favorable. Inflation is back at single digit. Of course, we're very pleased with that. But of course, the downside risk to our growth have now risen. So we need to make sure that we continue to fine-tune things. I think a weak external backdrop doesn't help, but we still have decent fundamentals. We still have strong fundamentals. So I think we'll probably end inflation in line with central bank forecast of 6.5% range, while still achieving possibly around 4% real GDP growth. Well, that's at least the base case scenario, assuming that Europe gets its act together and the crisis doesn't deteriorate from here.
That's a significant assumption. Mehmet Şimşek, the Turkish finance minister, sir, thank you very much indeed.